Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is February 24th, 2026. Let's dive in.
Looking at the Indian indices this morning, the signals are pointing toward a cautious, if not outright shaky, start. The GIFT Nifty is currently trading around the 25,607 level, which is a significant discount of nearly 98 points from the Nifty Futures' previous close. This suggests that the Nifty 50 and the Sensex are likely to open in the red as we digest a heavy flow of global news. In the F&O space, we're seeing a bit of a tug-of-war. While the domestic retail segment has been resilient over the last year, there's a sobering statistic coming out of the recent data. Retail investors' favorite stocks are actually down a median of 20% since January 2025. It seems the cautious stance maintained by foreign institutional investors, or FIIs, is being validated by the current price action. For today's trade setup, market experts are highlighting 7 specific stocks to keep on your radar: Bharat Forge, Torrent Pharma, M&M, Vedanta, PNB, Ather Energy, and Paytm. We're also seeing a lot of eyes on the volatility index as traders brace for the impact of U.S. policy shifts on our local IT sector. It's a morning where the wait-and-watch approach might be the most popular strategy on the floor.
Moving over to the international stage, Joe, it was a rough night on Wall Street. All 3 major U.S. indexes ended the session down by more than 1%. The Nasdaq and S&P 500 were hit particularly hard by a combination of AI displacement fears and renewed tariff angst. Interestingly, cybersecurity stocks led the decline after Anthropic launched a new AI-powered security scanning tool, which made investors question the long-term moats of traditional firms. Over in Europe, the FTSE, DAX, and CAC 40 have been navigating their own turbulence, closely following the developments of President Trump's trade policies. In Asia this morning, the picture is mixed. While the Nikkei is feeling the pressure from the U.S. sell-off, Chinese onshore shares actually saw some gains as they returned from the Lunar New Year break, fueled by a bit of optimism regarding potential tariff relief and homegrown tech buzz. However, the People's Bank of China kept its benchmark lending rates unchanged, 3% for the 1-year and 3.5% for the 5-year LPR. In commodities, gold is holding steady at a staggering $5,249 per ounce, and silver is surging as well. On the currency front, keep an eye on the rupee. Citigroup is suggesting that the RBI might actually start buying dollars to bolster reserves if the rupee strengthens toward the 88 to 89 per dollar mark. Also, a quick note for the housing market: U.S. mortgage rates have dipped below 6%, their lowest since 2022, as bond yields react to these economic uncertainties.
Returning to the domestic front, we have some very specific corporate stories shaping the day. First, let's talk textiles. We saw a massive divergence yesterday. Kitex garments rally 11%, while Gocaldas slipped about 4%. This is all tied to the U.S. Supreme Court's verdict on tariffs. Since many Indian textile players are heavily export-oriented, these legal flip-flops in Washington have a direct impact on their bottom line. Then there's the banking and fintech space. Paytm remains in the spotlight as it lands on the stocks to watch list for today, following a period of intense volatility. In the auto sector, M&M and Ather Energy are the ones to track. Ather, in particular, is being watched for its market share growth in the EV two-wheeler segment amidst shifting government subsidies. We also can't ignore the heavyweights. Vedanta and Bharat Forge are seeing movement as global commodity prices and defense export expectations shift. Finally, in the pharma space, Torrent Pharma is under the microscope as analysts reevaluate domestic versus international revenue mixes in light of potential new trade barriers.
Internationally, the corporate world is largely holding its breath for NVIDIA's upcoming earnings. NVIDIA has become the de facto barometer for the global AI trade, and with the recent AI scare, triggered by reports that AI could eventually lead to 10% unemployment, investors are looking for reassurance that the capital expenditure in this sector is still yielding results. In the logistics and retail sector, FedEx has made headlines by suing for a refund of Trump-era tariffs, following the Supreme Court's ruling that some of those levies were illegal. This could set a massive precedent for other multinationals. Meanwhile, in the tech and legal world, the Jane Street Group is suing the administrator of Terraform Labs for alleged insider trading, a move that harks back to the $40 billion crypto collapse of 2022. And speaking of trade, RXO's CEO Drew Wilkerson noted that while the freight recession persists, there are some positive trends emerging in truckload forecasts. However, violence in Mexico following the killing of a cartel boss is currently disrupting cross-border trade, which is a developing story that could affect U.S.-based companies with significant Mexican operations.
On the macro and geopolitical side, the big story is the tug-of-war between the U.S. executive and the judiciary. The U.S. Supreme Court recently ruled that the president cannot use a 1977 emergency law, the International Emergency Economic Powers Act, to justify sweeping reciprocal duties. This effectively invalidated a large portion of the current tariff wall. However, President Trump has responded by leaning on Section 122 of the Trade Act, announcing a new 15% global tariff. Experts are already saying this will be challenged in court because Section 122 is intended for balance of payments crises, which the U.S. arguably isn't in right now. For India, this is critical. A rescheduled India-U.S. trade negotiation meeting is on the horizon, and the outcome will dictate the flow of goods for our IT and manufacturing sectors. Meanwhile, the Fed is watching these developments closely. If tariffs drive up inflation again, those hoped-for rate cuts might be further delayed, keeping global capital flows tilted toward the U.S.
To wrap things up for our investors this morning, here are the key takeaways. First, expect a gap-down opening in India following the GIFT Nifty's lead. Second, the AI honeymoon phase in the markets is facing a reality check. It's no longer just about the potential of AI, but the potential for AI to disrupt existing business models, as we saw with cybersecurity. Third, the trade war is entering a legal phase. Watch for court rulings rather than just tweets or announcements, as these will determine the actual costs for exporters. Fourth, gold remains a very strong hedge as geopolitical and trade uncertainty stays high. And finally, for those in the Indian markets, keep an eye on those FII favorite stocks. They are currently underperforming retail picks, which suggests a broader shift in market leadership might be underway.
That wraps from today's update. I hope you gained useful insights.
Add your thoughts and comments and follow for more such updates. This is Sarah.
And Joe, signing off.